Hello friends, I hope you are all doing good. Hope your preparations are all going well. So I'm here to discuss about the amendments which are applicable in for taxation. So there are very less amendments. These amendments which we are going to see are applicable for CA, CS and CMA intermediate students. I hope your preparations are going well. So let us straight away start with the amendments. First we will discuss the amendments of income tax, then we'll cover the amendments of indirect tax. So amendments are not that much amendments are not there. So the income tax amendments, whatever you have discussed in the classroom, only those things are there. Only there are 2 points wherein there is a change in limits, of which you'll have to see. GST, there are 2-3 amendments which are good amendments, and wherein we can expect a question in examination. So with this brief intro, I'll just start the discussion, and of course the material will be there in the description. If it is not there in the description, please find there will be a Google link which will be in the comment. Maybe I'll post, or some of my students would post, or I will only post a Google link, Google Drive link, wherein I'll attach this material, so it will be available for download from that place. Okay, so with that being said, let me start the discussion. So income tax, the amendment, the first topic which we discuss under income tax law is basic concepts, wherein the basic concept which cover tax rates under income tax law, etc. So general tax rates, rates of income tax. So it is general tax rates are given in Finance Act. So you should be knowing that for those who are writing in May 26, June 26, September 26, December 26, and for CA inter students who are writing in Jan 27, for all of you, the Finance Act which is applicable. For all of you, the Finance Act which is applicable is Finance Act 2025. The Finance Act which is applicable is the Finance Act 2025. So this is the Finance Act applicable to you. So you don't have to study the latest budget which came on 1st of February 2026. That is not applicable for you guys. So those who are writing in May, June, September, December 26 or January 27, for you guys, what is the Finance Act applicable? Finance Act 2025 is applicable to you. Then so because the Finance Act 2025 is applicable to you, that means the previous year applicable to you for your examination will be what, sir? The previous year applicable to you will be the previous year 25-26, and the assessment year which will be applicable to you will be assessment year 26-27. So previous year 25-26 and assessment year 26-27 is the previous year and assessment year applicable to you for your examination. Yes, sir, this point is very clear, sir. So which is the Finance Act applicable and what is our previous year assessment year? That is very clear. Then, sir, what is the second important amendment, sir? The under tax rates, the amendment is there under default tax regime. So the tax rate under default tax regime has been changed. So you all know that an individual HUF, AUP, BOI, artificial judicial person, they have an option either to pay tax under optional tax regime or under default tax regime. So what is this optional tax regime? Optional tax regime is your normal regime up to 2.5 lakhs, no tax, 2.5 to 5%, 5 to 10, 20%, more than 10, 30%. That is your optional tax regime. But default tax regime, the tax rate has been changed. Just the tax rate has been changed under default tax regime. What is the tax rate under default tax regime telling, sir? So the tax rate under section 115 BAC, default tax regime is also called as 115 BAC, which is the new regime or the default regime which is applicable to individual HUF, AUP, BOI, artificial judicial person, that has been changed. And of course, you know that this is applicable to all types of individual, whether you are resident or non-resident. This is applicable to all types of individual irrespective of your age. Okay, there is no age criteria unlike the optional tax regime. So under default tax regime, there is no age criteria and it is applicable to both resident and non-resident person. So what is the change in tax rates, sir? What is the change in tax rates? Now the limit, the basic exemption limit is up to 4 lakhs. Up to 4 lakhs, if a person is opting for default tax regime, then he does not have to pay any tax up to 4 lakhs. Then if his income is from 4 lakhs to 8 lakhs, then he has to pay a tax of 5%. 8 lakhs to 12 lakhs, 10%. 12 lakhs to 16 lakhs, 15%. 16 lakhs to 20 lakhs, 20%. 20 lakhs to 24 lakhs, 25%, and more than 24 lakhs 30%. So basically very simple they have made. Now they have made it very simple. What is that simple thing, sir? See, if your income is up to 4 lakhs, you don't have to pay any taxes. Now your income is increasing by 4 lakhs. Your income will increase by 4 lakhs and your tax rate will be increased by 5%. Income is going to increase by 4 lakhs and tax rate is going to be increased by how much, sir? 5%. So if it is 4 lakhs to 8 lakhs, 5%, 8 lakhs to 12 lakhs, 10%, 12 lakhs to 16 lakhs, 15%, 16 lakhs to 20 lakhs, 20%, 20 lakhs to 24 lakhs, 25%, and more than 24 lakhs, it is 30%. So this is the tax rate applicable to you if you are following what, sir? Default tax regime. If you are following default tax regime. Further, if a person is following default tax regime, then even the rebate calculation is little different. For them, there is a change in rebate calculation also if you are opting for default tax regime. Do you remember that there is a rebate called as rebate under section 87A? This rebate is available only to resident individual if their total income is up to 12 lakh under new regime or default regime and 5 lakhs under old regime or the optional regime. So what is the change? The change again in the rebate, because there is a tax rate change of default tax regime, rebate also there is a change only for default tax regime ka rebate calculation. So what is this point telling? An resident individual assessee can claim rebate of an amount equal to, in new regime, when can you claim rebate, sir? If the total income does not exceed 12 lakhs, and under old regime you can claim rebate equal to if the total income is not exceeding 5 lakhs. Rebate is lower of tax payable or 60,000, whichever is less, whereas under old regime it is tax payable by you or 12,500, whichever is less. Then further, you know that you get extra benefit under new regime or under default tax regime. Under default regime, you get an extra benefit when your total income is slightly more than 12 lakh. See, normally you will get a rebate under new regime when the total income is up to 12 lakhs. But if your total income is slightly more than 12 lakhs, then also you will get a rebate calculated as per the concept of margin relief. Benefit of margin relief is available with respect to rebate under section 87A under default regime if the normal income is up to 12 lakh 70,585. So this amount, if your total income is more than 12 lakh rupees, up to how much? Up to 12 lakh 70,585 rupees, then also you will get something called as rebate. Now one more very important amendment wherein I feel they can test you at this attempt is this change. What is that change, sir? Rebate under section 87A is not available in respect of long-term capital gain under section 112A if you are following old regime. If a person is following old regime, then rebate will not be available against which income? Long-term capital gain under section 112A. But if a person is opting for new regime, he cannot claim rebate under or against any type of special income. If a person is following new regime, then he will not get rebate against any type of special rate income, against any income which are taxable at special rates. So let me just take 2-3 questions to explain this change in default tax regime ka tax rate. Let me take question number 1. Let us say Dilip is aged 33 years, has a total income of 36 lakhs. Compute tax under optional regime. Sorry, compute tax under default tax regime. So how will I compute the tax? See, sir, up to 4 lakh rupees, no tax. Then 4 lakhs to 8 lakhs, tax rate is how much? On 4 lakh rupees, it is 5%, which is 20,000. 8 lakhs to 12 lakhs, it is 40,000. On 4 lakhs, I should apply 10%. 12 lakhs to 16 lakhs, 60,000. On 4 lakh, I should apply 15%. Very simple. Income increases by 4 lakh, tax increases by 5%. Therefore, the tax amount will increase by 20,000 rupees. As simple as that. This is up to 24 lakhs. So 16 lakhs to 20 lakhs. On 4 lakhs, you should apply 20%. 80,000. 20 lakhs to 24 lakhs. 1 lakh. On 4 lakh, you should apply 25%. And more than 24 lakhs, how much is more? 36 lakhs is the income. So extra income above 24 lakhs is 12 lakhs into rate is 30%. So 12 lakh into 30%, 12 threes are 3 lakhs 60,000. So 3 lakh 60,000. So this is the normal tax which you have to pay. 20,000, 40,000, 60,000, 80,000, 1 lakh. So up to 24 lakhs, the tax amount will come to 3 lakh rupees plus 3 lakh 60,000, which is 6 lakh 60,000 is the tax which is required to be paid by you. Under default tax regime, you have to pay a tax of 6 lakh 60,000 rupees. Now, one question on rebate calculation. I'll take the rebate when the total income is more than 12 lakhs. Or I'll take both the rebates. Your total income is 11 lakh 80,000. What is the tax which you have to pay under default tax regime? If your total income is 11 lakh 80,000, that means your total income is up to 12 lakhs. If your total income is up to 12 lakh rupees, that is not more than 12 lakh, you will get a rebate of tax amount or 60,000, whichever is less. So what is the tax which you have to pay? Up to 4 lakhs, no tax. 4 lakhs to 8 lakhs, 20,000. 8 lakhs to 11 lakh, 80,000, which is 11 lakh 80,000 minus 8 lakhs into 10%, 38,000. So 58,000 is the total tax which you have to pay. Now before adding cess, we should subtract. By the way, on this question, I'm sorry, we should add health and education cess of 4%. 6,60,000 plus 4%. 6,86,400 is the answer. So over here I will subtract what, sir? I will subtract the rebate. Rebate under section 87A is tax amount or limit. Tax amount is 58,000, limit is 60,000, whichever is less. How much is the rebate, sir? 58,000 rupees. So 0 is what he has to pay. Now, there is one more method of calculating rebate for the default tax regime if their total income is more than 12 lakh. So that question also I'll take. Question number 3. Let us say the total income is 12 lakh 50,000 rupees. 12 lakh 50,000 rupees. So what is my tax up to 4 lakhs? It is 0. 4 lakhs to 8 lakhs 20,000. 8 lakhs to 12 lakhs 40,000. And more than 12 lakhs on 50,000 I should pay 15%. So 15 5s are 7,500. 20,000, 40,000 plus 7,500, 67,500 rupees. What is the amount, sir? 67,500. Now, how do I calculate the rebate? Because the total income is more than 12 lakhs. See, if the total income is up to 12 lakh 70,585 rupees, then also you will get a rebate under default tax regime. So, how much is the rebate amount? So, rebate will be equal to rebate under section 87A. So, very simple. First step is calculate the tax on total income, which we have already calculated before surcharge and cess, etc. Calculate the tax on total income, which is 67,500. Then, so tax on total income is 67,500 less extra income. Income above 12 lakhs. How much is the income more than 12 lakh rupees? They have given income of 12 lakh 50,000. So extra income is how much, sir? 50,000 rupees. So difference is 17,500. This is the rebate which will be given to you. So first, what is the tax on total income, which you are anyways calculating? Then see what is the extra income. Difference between this is rebate. So less rebate under section 87A. Please note this is available only for default tax regime assessee, and if the total income is up to 12,70,585 rupees. So I subtract this, I'll get 50,000. Add health and education ka cess at 4%. 5 4s are, and 52,000 is our net tax liability. I hope this concept is very clear to you all. Very easy, very simple concept it is. I hope it is clear. Then tax rates for companies have been changed. For company, I mean, this is anyways, there is no change as such, but this is something which they do every year. So for domestic company, the tax rate is 30%. For foreign company, the tax rate is 35%, which is normal. We all know. But for domestic company, if the turnover or gross receipts of the domestic company in the previous year 23-24 is up to 400 crores, is up to means less than or equal to. If it is up to 400 crores, then the tax rate for previous year 25-26 will be 25%. See, normally for domestic company tax rate is 30%, but the tax rate for domestic company will be 25% if the turnover or gross receipts for the previous year 23-24 is up to 400 crores. Then under income from salary, I feel that these two amendments which are there under income from salary are little important. They may test on this point. Which is there under income from salary. So second topic where there are changes is income from salary. Now, if you remember, there is the gas allowance is there, or electricity allowance is there, personal assistant is there, gardener is there, or we have education facility is there, or we have car facility we have, correct? No, all this exemption is available to specified employees. These exemptions are available to whom, sir? Specified employees. So these exemptions are available to specified employees. Who are specified employee? Director of the company, key managerial person of the company, or any other employee whose salary is, we had written that up to 50,000 rupees per annum. Now this limit has been changed. This 50,000 has been increased to 4 lakh rupees. So who is a specified employee? Specified employee is that person whose salary is up to 4 lakh rupees, whose salary is up to exceeds 4 lakh rupees, not up to, it exceeds 4 lakh rupees. If his salary is exceeding 4 lakh rupees. So this limit has been increased from 50,000 to 4 lakhs. So that is the only change in this point. So there is no other change. So, but this is an important change. For perquisite taxability, specified employee means those employee whose salary except perquisites exceeds 4 lakh rupees per annum. So if who is a specified employee? That person whose salary is more than 4 lakh rupees, whose salary is more than 4 lakh rupees per annum. Now, if you are a specified employee, there are some perquisites that are taxable only for specified employee. Which are these? motor car, that is car, which is car facility given by the company, education facility, facilities of sweeper, gardener, watchman, personal attendant, etc., gas, electricity, water supplied by employer for household consumption of employee, or free or concessional tickets, etc. Okay, so these are available only for specified employee. Now, who is a specified employee? Specified employee means an employee who is the director of the company, an employee who has the substantial interest in the company at any time during the previous year. What do you mean by substantial interest? You have 20% or more equity sharing or profit sharing ratio or voting rights, or this is the change. This is the newly added point, or specified employee means an employee whose taxable salary from all the employers put together, whose taxable salary from all the employers put together is exceeding 4 lakh rupees. Is exceeding what, sir? 4 lakh rupees. Okay. Taxable salary minus non-monetary perquisites exceeds how much? 4 lakh rupees. So basically, if you are an employee whose salary is more than 4 lakh, you are a specified employee. 4 lakh rupees per annum. Then there is one more change, which is an important change. This is also an important change. And for CA Inter students, there is something called as RTP. The RTP has tested this point. So in your CA Inter, the RTP which is released for May 26 examination, they have given a question on this point. There is a, very simple and easy point, good point. Now, if you remember, we had done a question, we had discussed a topic of medical facility given by the company. If the treatment is happening in India, then the treatment should happen in government hospital, government approved hospital, or employer ka own hospital. And the treatment is happening outside India, then for treatment and stay, then it is exempt as per RBI limit. But for travel, exemption will be given only if the gross total income is up to 2.5 lakh rupees. Now, this limit of 2.5 lakhs has been increased to 8 lakh rupees. This limit has been increased to what, sir? 8 lakh rupees. So this is a very good thing. So prescribed limit for gross total income, prescribed limit of gross total income for treating medical expenses as exempt under perquisites. For perquisite of medical facility, when the treatment is done outside India, traveling expenses done by the employer will be taxable when gross total income excluding these traveling expenses exceeds 8 lakh rupees. So when will it be exempt, sir? So it will be exempt. It will be exempt if your gross total income you should take before adding this traveling expenses. If your gross total income before traveling expenses is up to 8 lakhs, is up to 8 lakh rupees. So if your gross total income is up to 8 lakh rupees before considering this, then it will be exempt in your hands. If the gross total income is up to how much, sir? 8 lakhs. So earlier the limit was 2.5 lakhs. This is an important change. So salary, both the changes are good changes and important changes. Income from house property, as such, there is no specific amendment which you should focus on, meaning which is just a normal clarification they have given. The limit of number of house eligible for nil NAV, which is nil NAV means the net annual value of the house property will be taken as 0, is applicable for self-occupied and unoccupied house properties. Basically, we have discussed this. We have written this in the classroom. If the property is not occupied by anyone, unoccupied property is also treated as self-occupied property. Therefore, up to 2 properties you can claim exemption. An assessee may own house properties which are either self-occupied or it is unoccupied. Self-occupied property, a house property is treated as self-occupied when it is occupied by the assessee for his own residence. If I am using a house for my own residence, then it is a self-occupied property for me. Unoccupied property, a property is treated as unoccupied when it is kept vacant and not occupied for any reason. So if the property is there which is not occupied by you because of any reason, if it is kept vacant, for example, I am staying in Bangalore, in my village I have a house. Now because I am staying in Bangalore, the village house is not occupied by anyone. That is also treated as my self-occupied property. Now earlier Nil NAV benefit for unoccupied property was available only if the property could not be occupied because of employment, business, profession at some other places. So earlier this benefit they used to give only when the property is not occupied by you because you are working somewhere, because you are having business somewhere, because you are outside from that house because of any reason of your employment, business, profession, etc. But now this condition they have removed. So if you have not occupied your house because of any reason, then also it is self-occupied property and you can claim an exemption of NAV equal to 0. Now this condition has been removed. Therefore, the reason for not occupying the house is no longer relevant. So if you have a property which is not occupied by you, whatever is the reason why you have not occupied, I don't care. Lawmakers are telling, I don't care about the reason, it will always be exempt in your hands. Then under income from business and profession, is there any change, sir? Yes, major change which is important is the meaning of micro and small enterprises. That meaning has been changed. So that meaning is something which is important. Apart from that, all other changes are very normal and basic change. Basically, two changes are only there. Section 37 talks about residual expenses. If you remember, section 37 talks about general expenditure or residual expenses. All the expenses which are not allowed anywhere else can be taken as deduction in section 37. Now what is section 37 telling? The general expenditure ka section says that the expenses should not be specifically, you can any expenses related to your business, if it is not covered under 30 to 36, if it is wholly and exclusively for your business purpose, if it is not of personal nature, if it is not of capital nature, and if it is not an expenses prohibited by law. If it is not an expenses prohibited by law, or it is not for an offense which is prohibited by law, then that expenditure will be allowed as deduction. Meaning, if you want to claim deduction under section 37, one of the conditions is that expenses should not be prohibited by law. It should not be for an offense which is prohibited by law. So that expenditure you should not incur for any type of offense which is prohibited by law. Now here they have added 4 laws. They have added 4 laws. If you pay any penalty because you have violated any provisions of these 4 laws, then such expenditure also will not be allowed as deduction. With effect from 23rd April 2025, any expenditure incurred for settlement of proceeding due to contravention or default shall not be allowed as deduction under PGBP. Examples: penalty, fine, settlement, fees, etc. So any money which you are paying for settling the conflict, you have done any wrong, and to settle that you are paying some penalty, etc., then that will not be allowed as deduction. The applicable if paid under following laws: SEBI Act, Securities Contract Regulation Act, Depository Act, and Competition Act. Conclusion: expenses incurred for settling violation under above laws is not allowed as deduction under section 37. So if you pay any penalty for whatever violation you have done, to settle that, if you are paying any penalty, that is not allowed as business expenditure. Then this is an important change. The definition of micro and small enterprises has been changed. The definition of what, sir? Micro and small enterprises has been changed. Micro enterprises means those enterprises whose investment made by you in that business in plant and machinery is less than equal to 2.5 crores and the turnover of that enterprises is less than equal to 10 crores. So before it was 5 crores and this was 1 crore. Now they have changed. Anyways, we'll ignore what was there before. So micro enterprises, investment less than equal to 2.5 crores and turnover is less than equal to 10 crores. And small enterprises are those enterprises where the investment is less than equal to 25 crores and the turnover is less than equal to 100 crores. So small enterprises less than equal to 25 crores and less than equal to 100 crores is the turnover. Please note, this benefit is available only for micro and small enterprises. It is not available to medium enterprises. So small enterprises means that enterprises where your investment is less than up to 2.5 crores and the turnover is up to 10 crores. Small enterprises, the investment is up to 25 crores and the turnover is up to 100 crores. And both the conditions should be satisfied to be treated as micro and small enterprises. Under capital gain chapter, is there any change, sir? Not not the change wherein it is going to impact you drastically, etc. Yes, of course, that change is very important, where if any asset is transferred after 23rd July, there is no indexation. So one thing which you should note for capital gain question is that for whatever transfer has been made in the previous year 25-26, before we discuss about this amendment which is there, any transfer made in the previous year 25-26, meaning if any transfer of capital asset is made from 1st April 25 onwards, or till 31st of March 26, because they are going to ask you question relevant to this period only. If any transfer is made during this period, then while computing your capital gain ka amount, do not give any indexation. Meaning, while computing the capital gain, compute the capital gain without giving indexation benefit. Compute the capital gain normally. Take full value of consideration less expenses incentive to transfer will give you net sale consideration less cost of acquisition less cost of improvement. As simple as that. That will give you your capital gain. However, so while computing the capital gain amount, please note there is a difference between capital gain amount and the tax on capital gain. Capital gain amount and tax is a different thing. Capital gain amount, when you are computing, no indexation benefit should be given. However, if the person is an individual or an HUF, and if the question is asking to find tax liability, if the person is an individual or HUF, and if the capital asset is immovable property, so see this condition, 3 conditions also should be satisfied. If the person is an individual or HUF, and if the capital asset is an immovable property, and if the question says you to compute the tax liability on capital gain, on long-term capital gain to be specific. And if the question is asking you to do what, sir? Find the tax liability on long-term capital gain. All the 3 conditions should be satisfied. You should be an individual or an HUF. The property transfer, the capital asset should be an immovable property. And in such cases, and your tax liability, and the question is asking you to find the tax liability on capital gain, then you have to recompute. Please note, I am not telling you to compute, I am telling you to recompute, meaning this to definitely you should do. The basic point to without indexation definitely you should do, but when they ask you to compute the tax liability, then you have to recompute the capital gain along with indexation. You have to recompute the capital gain along with indexation ka benefit. Okay, then just to compute the tax, take the tax at 12.5% without indexation, 20% without indexation, whichever is less is the tax which you have to pay. So this is something which you should note. While computing the capital gain amount, there is no indexation benefit, but when they ask you to compute the tax on capital gain for individual or HUF for sale of or transfer of immovable property, then you have to recompute the capital gain along with indexation and take the tax equal to 12% or 20%, whichever is less. I hope this point is very clear to you all. Let me come to the main point. Now, section 2 clause 14 talks about the meaning of capital asset. Capital asset means property of any kind held by the assessee, whether connected to the business or not, or it includes any securities held by foreign institutional investor. Correct? No, something like this we have discussed. Now here they have added one more person. So capital asset means property of any kind held by the assessee, whether connected to business or not, or any securities held by foreign institutional investor investing as per SEBI regulations. Okay, that was there. Now here they have added one more point telling any securities held by investment fund referred to in section 115 UB investing as per SEBI regulation or IFSCA regulation. So here who have been added, sir? Investment fund under section 115 UB are the newly added person. And ULIP, which is not exempt under section 1010D, was already there. Now we have a section called as section 54 EC. Section 54 EC says if you transfer any immovable property, Section 54 EC says if you transfer any immovable property and by transferring that immovable property, if you get any long-term capital gain, then that long-term capital gain will be exempt if you invest your money in government bonds. This long-term capital gain will be exempt when, sir, if you are investing the money in government bonds. Now, these government bonds had only 4 bonds, which were NHAI, RECL, IRFCL and PFCL. Here they have added 2 more bonds. They have included 2 more bonds. One is HUDCO bond and one is IRADA. See, NHAI is National Highway Authority of India, Rural Electrification Corporation Limited, Indian Railway Finance Corporation Limited, Public Finance Corporation or Power Finance Corporation Limited, sorry. HUDCO is HUDCO and IRADA. I just forgot the name. Just now I had HUDCO. One second. Gobeism is happening in life. HUDCO is Housing and Urban Development Corporation Limited. IRADA is Indian Renewable Energy Development Agency. Okay, so these are the new bonds which is added. Don't worry, we have anyways discussed this in a classroom. It is already discussed, but just revision. Now here, how much is the exemption you get under 54 EC? You get an exemption equal to the capital gain amount or the amount invested by you or limit of 50 lakhs, whichever is less. Limit of 50 lakh rupees, whichever is less. Then the cost of inflation index for the financial year 25-26 or for the previous year 25-26, the cost of inflation index is 376. This is also discussed. Capital gain arising on transfer of market linked debentures and unit of specified mutual fund would always be short term capital gain, and this is provided under section 50AA. So this is also anyways covered. So capital market linked debentures and units of specified mutual fund will always be short term capital gain irrespective of your period of holding. Then under deduction chapter, is there any change under deduction chapter, sir? Only one small point is there. You remember there was a section called a section 80CCD, correct? No, which talks about National Pension Scheme or Atal Pension Yojana or Central Government Pension Scheme. So if you invest money over here, you will get deduction under section 80CCD1 if you are a salaried employee for employee ka contribution, and you will get a deduction under section 80CCD2 for employer ka contribution. Correct? No, something like this we have discussed, and you will also get a deduction under section 80CCD1 if you are not a salaried employee. Correct? Something like this was there. Here, before 3 items were there. Who are the 3 items covered under 80CCD? The 3 people who were covered under 80CCD were National Pension Scheme, Central Government Pension Scheme or Atal Pension Yojana. Correct? No. Here they have added a new person in life, NPS, National Pension Scheme ka Vatsalya scheme. NPS have got a new scheme called as Vatsalya scheme, which is also included in this 80CCD ka benefit. And for the contribution made by you under Vatsalya scheme, you can claim a deduction under section 80CCD 1B. Whatever that 50,000 ka benefit is there. This is an important adjustment. Important for CA inter students. For CMA and CS, they don't normally test on all these points, but still, yeah, this is an amendment and of course important amendment. Section 80CCD now covers contribution to NPS Vatsalya scheme. What is NPS Vatsalya scheme? NPS Vatsalya is a scheme designed for minor Indian citizen. So it is a scheme which they have specifically designed for whom, sir? It is a scheme which is specifically designed for those who are minor citizens and those who are minor Indian citizens. Those who are what, sir? Minor citizens. What type of minor citizens? Those who are minor Indian citizens. Key features of this scheme is the account will be opened and operated by parent or guardian on behalf of minor. So parent or the guardian will open the account on behalf of minor. When the minor attains the age of 18, the account will continue to remain operational and be shifted to NPS tier 1 account like just normal your NPS account. So basically this is an account open in the name of the minor, and in future it will become the normal NPS account once he attains the age of 18. Contribution to NPS Vatsalya, eligible assessee who is eligible to contribute, parent or any person who is guardian of minor. Deduction will be allowed. Amount deposited in minor's NPS Vatsalya account is allowed as deduction under section 80 CCD 1B, where is the limit is how much, sir? 50,000. Aggregate maximum deduction allowed is 50,000. Important point, the limit of 50,000 includes assessee's own contribution to NPS and contribution made to minor's Vatsalya account. Meaning that 50,000 limit is 50,000 limit only. There is no extra 50,000. That is the fixed 50,000 which was there before also. Now withdrawal taxed as deemed income. So when you withdraw the money from this scheme, it is taxed as deemed income. However, there are some exemptions also applicable. Amount received from pension account of assessee or minor upon closure of the account shall be taxable as income in the year in which such amount is received by the assessee or the nominee. However, certain withdrawals are fully exempt. When is it exempt? Certain withdrawals are exempt, not fully exempt, specifically exempt. In the following cases, amount withdrawn shall not be taxable. When will the amount withdrawn by you be not be taxable? In case of partial withdrawal shall be exempt from tax if the withdrawal does not exceed 25% of amount contributed. So if you withdraw up to 25% of the amount contributed by you, then that withdrawal is not taxable. Exemption will be available only to employees, self-employed persons and parent or guardian of minor. Next, if you are withdrawing the money on closure of account, if the 60% of the total amount payable at the time of closure is exempt. So when you withdraw the money at the time of closure, let us say the amount was 10 lakh rupees which is withdrawn by you, 6 lakh rupees will be exempt. Amount received on death. Amount received by nominee or the parent or the guardian or the minor upon closure of account due to death of the assessee or the minor shall be exempt. If you take the money at the death, that means it is completely exempt, not even 1 rupees is taxable. Or amount is used for purchase of any annuity plan. So if you are purchasing any new plan, then whatever amount you have withdrawn, that is exempt. Then under TDS topic, there is small changes. There is change in threshold limit and the TDS rate. Okay, TDS rate and threshold limit is changed. So section 193, interest on securities, the limit is now 10,000 rupees. So if the interest amount is more than 10,000, then only TDS will be applicable under section 193. So before it was 1,000, 10,000 and there was no limit in some cases, etc. Now they have removed all those things, and for TDS on interest on securities, if you are earning, then 10,000 is the limit. Section 194A, interest other than interest on securities. Here they have increased the limit. So if you are a bank, cooperative, banking company, cooperative banks, etc., then the limit is now 1 lakh rupees. Before it was 50,000 rupees, and for others it was 40,000. In case of senior citizen deductee, now before it was 50,000, now it is 1 lakh rupees, and for others it was 40,000. Now they have increased it to 50,000. So if interest is paid by bank or cooperative banks, etc., then if the person to whom you are paying interest was senior citizen, the limit is now 1 lakh rupees. If it is not other than senior citizen, 50,000 rupees limit is there. And if the interest is paid by any person other than bank, etc., then the limit they have increased to 10,000 rupees. If you are paying an interest more than 10,000, then only you should pay. Deduct TDS. Dividend 192, if paid to all individual shareholder by non-cash mode more than 10,000 rupees, then TDS is applicable. So before the limit was 5,000, now the limit has been increased to 10,000 if you are paying dividend to any individuals, etc. Income from unit of mutual fund, limit was 5,000, now it is increased to 10,000. Now this is important change. This is an important change. So from winning from lottery, betting, gambling, etc., 194B TDS is deducted. So casual income flat 30% is the tax which you have to pay on this casual income. TDS rate is also 30%. Now this 30% TDS was applied before for aggregate transaction, meaning if the total money received by you in a year is more than 10,000 rupees. If the total money, if the aggregate money received by you during the year was more than 10,000, then it was made applicable. But now they have changed, and this is a very good change. They say the limit will be seen of 10,000 for individual and separate single transactions. Meaning, if I win lottery 3 times a year, I won lottery 1, lottery 2, lottery 3. So before, what was the concept telling? First lottery 8,000 I won, second lottery I won 2,000, third lottery I won 5,000. So total is how much? 15,000. Now TDS is applicable on this entire 15,000 amount because it is more than 10,000 rupees. Now as per the new rule, what is the new rule telling? First lottery 8,000, second is 2,000, third is 15,000. Now the total is how much, sir? 25,000. I am least bothered about the total. First 2 cases, because the individual single transaction value is not more than 10,000, the TDS is not applicable. TDS will be applicable only on the last transaction, which is more than 10,000. So now we should see single transactions, separate transactions, individual. Same for horse race also. Now it is single transaction instead of aggregate transaction. Insurance commission, if you are paying, then if the insurance commission is paid more than 20,000, then insurance commission ka TDS is applicable. Lottery commission also, the limit is increased to 20,000, and any other type of commission limit is increased to 20,000. So if you are paying commission to anyone, what is the TDS applicable limit, sir? 20,000 rupees is the limit. So if you are paying commission more than 20,000, then only TDS is applicable. Then one more important change is 194I. Please note, 194B is important, 194I is also very important. If you are paying rent to anyone, so before it was, if the total rent in a year crosses 2,40,000, total rent in a year crosses 2,40,000, then you have supposed to deduct TDS. But now this limit has been increased to how much, sir? 50,000 rupees per month. If the total rent paid by you in a month or part of month, if the total rent paid by you, if your monthly rent is up to 50,000, no TDS. If the monthly rent is 50,000 or more than 50,000 rupees for the month or part of the month, then only TDS will be applicable. Good change, important change. Then 194J also, there is a change over here. So for 194J, there are 5 payments, which is professional fees, technical fees, then royalty, then you have your non-competing fees, etc. Correct? No? You have your non-competing fees, and you have your director ka remuneration. Correct? No? Now for each of these, professional fee, technical fee, then royalties, non-competing fees, for each of this, the limit is now increased to 50,000 from 30,000. So before, for individual, all the payments separately, for all the items separately, the limit was 30,000. Now also for all the items separately, the limit has been increased from 30,000 to 50,000 rupees. And if you are paying any money to the director, for director remuneration, the money, the limit, there is no limit at all. There was no limit before, now also there is no limit. So for professional fees separately 50,000, technical fees separately 50,000, royalty separately 50,000, non-competing fees separately 50,000. Then 194 LA. So if government is giving any compensation for compulsory acquisition of capital asset, then TDS was applicable if the amount consideration was more than 2,50,000. Now this limit has been increased to 5 lakh rupees. And TDS on insurance commission has been reduced from 5% to 2%. Now this is a newly added section, which is 194T. What is this 194T talking about, sir? 194T talks about remuneration and interest paid to partners. This is an important section, nice section, newly added section under TDS topic. So if you are a firm and if you are paying any interest, if you are paying any money means you are paying any remuneration, salary, bonus, commission, interest to your partners, then this provision is applicable. So deductor should be firm, deductee should be partner of the firm. Rate of TDS is 10%. TDS is required to be deducted at the time of payment or at the time of credit, whichever is earlier, and the limit is 20,000 rupees is the aggregate limit during the previous year. The limit is what, sir? 20,000 rupees in aggregate in total. So if TDS, if aggregate amount is more than 20,000 rupees in a previous year. So when is this point applicable? If the total remuneration, interest paid by you combined together, totally it is more than 20,000 rupees, then whatever amount you are paying to them on that TDS, whatever amount you are paying to partner, on that you should deduct a TDS at 10%. Non-applicability, compulsory acquisition of, so this is actually wrongly added over here. Then under TCS, is there any change, sir? Yes, under TCS or on a timber under forest use and any other type of timber, the TDS rate has been now 2% reduced from 5% to 2%. Then this is to anyway same. Here there is a change. This is a good change, important change. Now, if you remember, there was a point which was talking about TCS. TCS for sale of car. If the car value is more than 10 lakh rupees, then the person who is selling the car will collect extra 1% from you as TCS. Correct? No, they will collect a TCS of equal to 1%. Now, they have added few more items over here. They have told retail sale of motor car or retail sale of any other specified goods which is luxury goods. If the value is more than 10 lakh rupees, then TCS will be applicable. So if you are purchasing a car whose value is more than 10 lakhs rupees or any other type of luxury goods. Now what is a luxury goods? Luxury goods means you are purchasing a wristwatch. You are purchasing a watch. Now all this came because you see the Anant Ambani is wearing 3 crores ka watch. He has gifted 2 crores ka watch to his those people who came to his wedding, etc. So these things have come only to target those peoples. Only to target those peoples because they are wearing watches which are very costly, etc. So to target them, this provisions has been introduced. So if you are purchasing any wristwatch whose value is more than 50,000, if you are purchasing any not 50,000, 10 lakh. If you are purchasing a wristwatch whose value is more than 10 lakh rupees or any art piece whose value is more than 10 lakh rupees, any collectibles such as coins, stamps or yacht, boat, helicopter, cannon or sunglasses you are purchasing or handbag you are purchasing or shoes you are purchasing, sports wear and sports equipment you are purchasing, or you are purchasing horse, or you are purchasing a home theater system for your house. If the value of these things separately is more than 10 lakh rupees, then that person who is selling them to you will collect extra 1% as TCS. Overseas remittance. Now for overseas remittance, there is a change in limit. So before the 7 lakh limit which was there, that 7 lakh limit is now increased to 10 lakhs. So if you are purchasing foreign overseas tour package up to 10 lakh rupees, 0 to 10 lakhs, 5% was the 5% is the TCS applicable. More than 10 lakhs, if you are spending, then 20% is the TCS applicable. If the amount is sent outside India, and if the amount you are sending, see, you are purchasing an overseas tour package, that means you are booking your tour travel outside India. When you are sending the money, amount remitted outside India, if it is up to 10 lakh rupees, you are sending to your relative, your friend, whoever is there outside India, up to 10 lakh rupees, no TCS. But if you send more than 10 lakh rupees, then 5% TCS is applicable if the money is sent for the purpose of education or medical treatment. And if the money is sent for any other purpose, then up to 10 lakhs, no TCS. More than 10 lakhs, 20% is the TCS applicable. For education and medical, 5%. For any other purpose, 20%. And if the amount is remitted outside India for education loan, you are repaying any education loan, and in a year the total amount is more than 10 lakh rupees, then 0.5% of the total amount in excess of 10 lakh rupees, meaning only on the extra amount they will levy 0.5%. Then return of income, also there is one chapter called as return of income, under which section 139.6 and 139.6a has been removed. And for updated return, before we had that updated return should be filed within 24 months, correct? No? Now they have increased it to 48 months. This updated return card time limit, they have been increased to 48 months. Therefore, of course, if they have increased the time limit to file your updated return, then they would have also increased the penalty which you have to pay along with updated return. Yes, they have done that. Option to file updated return of income. Any person may furnish an updated return of his income or income of any other person in respect of which he is assessable for the previous year relevant to the assessment year at any time within 48 months from the end of the relevant assessment year. So for example, if I want to file updated return for previous year, let us say 2021. So for this previous year, the assessment year is 21-22. So from here I can take 48 months. So this year is ending on, this year ends on 31st of March 2022. From there 48 months. 48 months means how many years? Can I say 4 years? So I can file updated return till 31st of March 2026. Okay, I have time limit to file it till 31st of March 2026. Now, because they have increased the time limit from 24 months to how many months, sir? 48 months. Of course, the penalty which you have to pay will also increase. So before we had, if you file it within 12 months, then 25%. Then if you file it after 12 months, but within 24 months, it was 50% was the penalty. Penalty was how much, sir? Additional income tax which is payable is 25% of the total tax and interest payable by you as calculated in updated return, and 50% of the total tax and interest payable by you in case it is filed after 12 months within 24 months. If you file it after 24 months but within 36 months, after 24 but within 36, then it is 60% of tax interest payable as determined above. 60%. If it was after 24 within 36 months, now 60% new limit has been increased. If you file it after 36 but within 48 months, 75% of tax and interest payable by you is the additional tax or the penalty. Basically, they have given the name as additional tax which you have to pay. Okay, so this is all about the amendment in the chapter or in the concept of income tax. So these are the amendments of income tax, very small and easy amendments. What are important amendments is the penalty for updated return is important. Then these new items which is added, wristwatch, etc., that is important. Then 194J, 194I and 194B, 194T newly added section, these are important. Vatsalya may be asked, or this 54EC ka exemption, micro and small enterprises ka definition. Then this limit under salary ka, both the amendments are important. Okay, and of course this tax rate. So this is about the changes which are made under which law, sir? Under income tax law. Now we'll see the changes under GST law and then conclude the discussion on our amendment ka concepts. Okay, so let us start the discussion on the amendments under which topics are GST topic. Okay, so let us start. So charge under GST is the first amendment. Before that, supply under GST we have. See, first we have introduction. There is no change in introduction. Supply under GST, there is an amendment, but which we have already recorded it before. But because it is an important amendment, let me just revise it for you. So if you remember that there is something called as negative list of supply. Correct? No, negative list of supply or activities which are neither treated as supply of goods nor supply of services. So which has a schedule called as schedule number 3. Correct? No, schedule number 3 has that services given by employer to the employer in the course of employment, services by court or tribunal, MLA, MP, services of funeral, burial, sale of land, and sale of building, and actionable claims, etc. Not the specified actionable claims. These were the points which are normally there. Apart from that, there are 2 more new points which is added. So which is an important point about which they have not tested in the examination yet. So this is already discussed in the previous amendment lecture, etc., or the classes already it is discussed, but because it is important, so let me just revise it. So here we are talking about what, sir? Negative list of supply or not a supply. So whatever we are going to see now, this is not a supply. Activities of apportionment of co-insurance premium by lead insurer to co-insurer for insurance services jointly supplied by them to the insured. What is this point telling? Activity of apportionment. Apportionment means dividing the co-insurance premium. Who is dividing the co-insurance premium? By the lead insurer. To whom? To the co-insurer for the insurance services which is jointly supplied by both of them to the insured is not a supply, subject to condition that lead insurer has paid GST on entire insurance premium. So basically, whatever services co-insurer is giving to lead insurer, on that no GST will be levied if the lead insurer has paid the GST on full insurance premium. Let me just tell you this point properly. Let us say I have a factory which is worth 100 crores. So I went to a general insurance company. I told them that please give insurance on my company, my factory. So they said definitely yes, I will give the insurance on your factory, but for that you will have to pay an insurance premium of 10 lakh rupees. I said okay, I agreed for it. Now general insurance company felt that for general insurance company 100 crore risk is too high, therefore it thought of adding one insurer along with it. Okay, so general insurance company added whom, sir? HDFC insurance company, telling that will you be my co-insurer for this Dilip ka 100 crore ka factory, will you be my co-insurer? So HDFC agreed. So HDFC told I will take 30% of the risk. So if you take 30% of the risk, that then general insurance company, which is the lead insurer, because I went to general insurance company, it told okay, I will give you 30% of the premium amount. Okay, now what is happening over here? What is happening over here? Basically, if you see from my point of view, I have no idea who is HDFC. So for me, service provider is general insurance company and I am the service recipient for which I am paying a premium of 10 lakh rupees. Now, general insurance company is taking insurance, is sharing its insurance with whom, sir? HDFC, for which general insurance company is going to pay part of the premium amount. On the premium amount which the general insurance company is going to pay to HDFC, on that there is no GST applicable because it is not a supply. As simple as that. This is not a supply, therefore no GST is applicable. On what GST is not applicable, sir? Whatever, see, GST is not applicable for the insurance premium which is given by general insurance company to HDFC if condition is general insurance company should have paid the GST on the full insurance premium which they have collected from me. So I have given an insurance of 10 lakh rupees to general insurance company. On this entire 10 lakh rupees, GST should be paid by general insurance company. Then in such cases only, whatever insurance premium is paid by general insurance company to HDFC insurance, on that GST is not applicable. So this is one point. So services are given by general insurance company to Priya Saris. Premium is 10 lakh rupees. Yes, it is a supply and GST is applicable. Services given by HDFC to general insurance, that is co-insurance ka sharing services. Premium paid by general insurance to HDFC is how much? 3 lakh rupees. Not a supply if general insurance company has paid GST on full premium of 10 lakh rupees. Similarly, there is one more concept of reinsurance. Co-insurance means the risk is shared between two people. Reinsurance means what, sir? See, co-insurance means same asset ka risk is shared between two people. Reinsurance means what, sir? I have taken insurance. Now that insurance I am transferring to someone else. Okay, reinsurance means taking insurance on insurance basically. Now what is this point telling? Services by insurer to the services given by the insurer to the reinsurer. Services are given by whom? Insurer to the reinsurer, for which ceding commission or reinsurance commission is deducted from reinsurance premium paid by the insurer to the reinsurer is not a supply, subject to a condition that GST is paid by the reinsurer on the gross insurance premium payable by the insurer to the reinsurer. So basically here the question is about commission. In the previous case the question was about premium, and here the question is about commission, or this is called as reinsurance commission, or it is also called as ceding commission. So basically this question is about commission. Now what happens normally under insurance? Under insurance what happens normally? See, Dilip is an insurance agent. Dilip is giving services to insurance company, correct? So I am giving services to insurance company, for which company is going to pay me insurance ka premium. And on this insurance ka premium, GST is applicable. Why? Because I am the service provider, insurance company is the service recipient, and therefore on this particular transaction, GST is applicable. This is very clear to us. Yes, sir. This is to something which I already know. Correct? In simple words, if I am Why is the company giving me insurance commission? Because I am helping company find different people to whom they can sell their product, that is the insurance. They can sell their insurance. Therefore, the insurance company is giving me what, sir? Commission on which GST is applicable. On which GST is applicable. Now, same thing in a larger perspective we will see. Let us say there is a company called as Air India which has taken insurance on its flight. It has taken an insurance of 3,000 crores and it has taken insurance from Tata Group. Okay, Tata AIG is the insurance company. So it has taken insurance from Tata Group. Now what Tata Group have done? They have taken reinsurance. They have shifted their risk, or they have taken reinsurance. They have on this insurance which Tata has taken, they have taken insurance again from HDFC Insurance Company. Who? Tata Group, meaning the Tata AIG, the Tata Insurance Company has taken insurance from whom? HDFC Insurance Company. Now for this they have to pay HDFC something called as reinsurance ka premium, something insurance premium they'll have to pay because they are taken reinsurance premium will be paid. Correct? No? So something like this will happen, but we should be least bothered about what transaction is happening over here. What is important for us is about the commission point. What is important for us is about commission. Let us ignore the concept of reinsurance. Let us understand the commission over here. Just understand the commission. Now let us understand just the point of commission over here. See carefully. Air India wants to take insurance on its flight. Correct? It wants to take insurance on its flight. Now don't take Tata Group as, or Tata Insurance Company as an insurer. Okay, you ignore Tata Group as an insurer. You just think that he is an agent. Who? Tata Insurance Company is an agent for who, sir? HDFC Insurance Company. So Tata Insurance Company is helping HDFC Insurance Company to find customer who is Air India. Okay, you understood this concept? Normally what happens? Dilip is an agent who is helping insurance company find different customer who can purchase insurance policy. Just like that, in this case, what you understand is there is Air India which wants insurance and there is HDFC Insurance Company which wants to sell insurance. And they have found Tata in between who is acting as an agent. So Tata's job is to find or help HDFC find customers. Correct? So now for which, don't you think because Tata is helping HDFC find a customer, Tata will pay an insurance commission to the Tata. HDFC is going to pay insurance commission to Tata. Why, sir? Because Tata has helped HDFC find a customer. Now this commission is called as ceding commission, or it is called as reinsurance commission. On the ceding commission or reinsurance commission, no GST is applicable. No GST is applicable, but there is a condition. GST will not be applicable if the insurance company, that is HDFC Insurance Company or the reinsurer, basically, reinsurer has paid GST on full amount of premium. Reinsurer has paid the GST on what, sir? Full premium ka amount. What is the full premium ka amount? Whatever the reinsurance premium, on that full amount they have paid GST. Okay, you understood this concept? Now I'll come to this point and explain in this manner. I mean, with respect to this. Air India has given insurance to Tata Group. Tata Group has taken reinsurance. Now Tata Group will pay insurance premium of 50 crores. It has agreed that HDFC has told you will have to pay me a reinsurance premium of 50 crore rupees. Now 50 crores is what Tata has to pay to HDFC, right? But what Tata is doing is, Tata is deducting its insurance commission. HDFC told I will give you a commission of 20%. So 50 crores into 20% is how much? 10 crores. So what Tata is doing, instead of giving 50 crores, then HDFC paying back 10 crores, what Tata is doing, Tata is directly giving only 40 crores. Tata is directly giving 40 crores, meaning instead of giving 50 crores, it is reducing 10 crore ka commission and paying 40 crores. Now, the 10 crores ka commission on that GST will not be applicable if HDFC has paid GST on entire 50 crores. So, it is like I have sold goods to you, you have sold goods to me. My sale value is 10 lakh rupees, your sale value is 2 lakh rupees. So you are making a net payment of 8 lakh rupees to me instead of paying 10 lakh rupees. So just like this, what is happening? Instead of paying 50 crore rupees, Tata has paid only 40 crores after deducting its insurance commission of 10 crores. Okay, now on this insurance commission, GST is not applicable if HDFC has paid GST on the entire 50 crores, though it has received only 40 crores. That is what this point is telling. No GST shall apply on 10 crores seeding commission if GST is paid by HDFC on full 50 crore rupees. Okay, so this is one important, this is an amendment which is there in the topic number 1, which was an important amendment. Next, charge under GST chapter is there. Charge under GST. Charge under GST has a section called as section 9 subsection 5. Section 9 subsection 5 talks about what, sir? Supply through e-commerce operator. This is an important section for this attempt. Section 9 subsection 5 talks about supply through e-commerce operator, which said if notified services are supplied through e-commerce operator, then the tax on that supply should be paid by e-commerce operator. Provided that if e-commerce operator does not have physical presence in taxable territory, then any person who is representing that e-commerce operator in taxable territory should pay the taxes. Provided further that if the e-commerce operator does not have physical presence in taxable territory and it does not have any representative in taxable territory, then it should appoint a person in taxable territory to pay the taxes. This is the provision. Now the services notified over here were what, sir? Transportation of passenger, accommodation in hotel, inn, guest house, then housekeeping services, and then what, sir? 4 services were there. Restaurant services, correct? These 4 services were there, meaning Ola, Uber was there. Then we had Oyo, Make My Trip, etc. Then we had Urban Company, and then we had Swiggy, Zomato. Now they have added one more item over here. That is the only point. They have added one more services called as services by way of local delivery. Services by way of what, sir? Local delivery. So basically they have added whom, sir? Dunzo, and they have added Porter. So they have added these services of local delivery in this category. So under section 9 subsection 5, tax payable by e-commerce operator, a new service has been added. Services by way of local delivery, except where the person supplying such services is through e-commerce operator, is liable for registration. So if you are a person who is supplying services of local delivery, then who should pay the taxes? E-commerce operator. However, if the service provider is registered, then the service provider has to pay the taxes and not e-commerce operator. Meaning, just like your accommodation, housekeeping and restaurant, normally in case of accommodation, housekeeping and restaurant, who has to pay the taxes? The e-commerce operator, which is Oyo, Urban Company or Zomato, has to pay the taxes. But the person who is supplying accommodation services or housekeeping services or restaurant services, if they are registered under GST law, the supplier should pay the taxes and not the e-commerce operator. Exactly same point is applicable for services of local delivery. So for services by way of local delivery, who should pay the taxes? Dunzo or Porter should pay the taxes. But this Dunzo or Porter, if it is not Dunzo or Porter, if you guys don't know, then these people are, see, many people are there where they come from a place where they don't have the facility of Dunzo or Porter, etc. So basically these people are the people who are helping the local delivery of different goods from one place to another place. So normally who should pay the taxes in case of local delivery, sir? The e-commerce operator, which is Dunzo or Porter, should pay. However, if the supplier, if the person who is supplying the services through Dunzo or Porter, if he is registered under GST, then the supplier has to pay the taxes and not Dunzo or Porter. So if I am a transport company which is registered under, transport company means I am a person who is involved in the business of transportation of goods, and I am registered under GST law, and I am supplying services through Dunzo or Porter, then Dunzo or Porter should not pay the taxes. I as the supplier only have to pay the taxes. So this is a newly added point, important point, good point, amendment, good amendment. Then they have changed the definition of GT. They have changed the definition of GT. GTA ka definition has been changed. Normally, what do you mean by GTA? GTA means what, sir? GTA means goods transport agency, means any person who provides services in relation to transportation of goods by road and who issues a consignment note by whatever name called. Correct? What is a GTA? Any person who is giving services of transportation of goods by road and who issues a consignment note. That is what we have studied. And who issues what, sir? Who issues a consignment note? That is what we have studied. But GTS shall not include. GTS shall not include what, sir? GTS shall not include an e-commerce operator by whom the services of local delivery are provided, meaning it shall not include porter, or it shall not include Dunzo, or an e-commerce operator through whom services of local delivery is provided. So through whom is basically porter, by is porter as well as Dunzo. So what are they telling? GTS shall not include an e-commerce operator by whom or through whom local delivery services are provided. Now, as you all know, that from 22nd of September 2025, the rate under GST law is, you have only two rates under GST law, 5% and 18%. So wherever it was 5%, it is kept as 5%, but wherever it was 12%, that is either replaced to 5% or it is replaced by 18%. So under in GST, GTS services and renting of motor vehicle services, both of these are taxable either under 5% or it was taxable under 12%. It was taxable under 12% or it is taxable under 5%. 5%, if a GTA or renting of motor vehicle service provider, if he is opting for 5%, then they cannot take input tax credit and they'll have to pay tax of 5% on outward supply. But if a GTA or renting of motor vehicle service provider, if they opted to pay tax at 12%, then they were allowed input tax credit, and on their outward supply they had to pay tax at 12%. Correct? This was what was the logic over there. This was the provision. Now this 12% criteria has been removed. Now instead of 12%, it is replaced by 18%. That is the only thing. So GT or renting of motor vehicle services, they have an option to pay tax at 5% without claiming input tax rate, or pay tax at 18%. Nothing else. Taxability of goods transport agency services, where GTA has not taken input tax credit on goods or services used in supplying goods or services, then it is taxable at 5%. This remains unchanged. Where GTA wishes to avail ITC on goods or services used while supplying GTA services, earlier it was taxable at 12%. Now it has been changed to 18%. 18% is the IGST rate, 9% CGST, 9% SGST. Same is with respect to renting of motor vehicle, where the supplier wishes to avail ITC without restriction of goods or services used for supplying renting of motor vehicle services. Earlier was taxable at 12%, now it is changed to 18%. So that is not a great change. Another important change is there in exemption. Important in the sense there are new entries which is added. So you just have to know. I mean, from exam point of view, is that important? No, but there is new entries added. Amendments in existing exemption. So there is some existing exemption. If you remember, transportation of goods services, if it is provided by GTA or through courier agency, then it is taxable. Correct? No, it is taxable. Any other type of transportation of goods services by road is exempt. But here there is one small explanation they have added. Services by way of transportation of goods by road is exempt, except the services given by GTA or courier agency. Except the services given by GTA or courier agency, meaning services given by GTA or courier agency is taxable. Any other services of transportation of goods by road is exempt. However, they have added an explanation telling nothing contained in this entry shall apply to, the exemption shall not apply to local delivery services provided by an e-commerce operator. It will not be applicable to local delivery services given by e-commerce operator or local delivery services provided through e-commerce operator, meaning these will be always taxable. Then, now, when this change happened on 22nd of September, when they changed the tax rates, etc., here one more very great change which they did was with respect to removing the insurance on, removing the GST on insurance, health insurance and life insurance were there. No, on that health insurance and life insurance, the GST is only completely removed. GST is not applicable on them. So now it is exempt. They have put in that exemption criteria. Services of life insurance business provided by insurer to the insured, where the insurer insured is not a group. So basically life insurance services taken by whom, sir? A normal individual. Services of life insurance business provided by insurer to the insured, where the insured should not be a group. Explanation: for removal of doubt, it is clarified that this exemption shall apply to contract of insurance where the insured is an individual or an individual and his family. So if I take insurance for myself, or if I take insurance for myself along with my family, then this is not treated as group. For me and my family is not treated as group for the purpose of this section. For the purpose of point A above, family includes all individuals. Or family means what, sir? All individuals insured as a family in the contract of insurance. All those people who are covered in that insurance as my family will be taken as family. So they have not specifically given the definition of family. They have told whomever you call your family is your family. So this is for life insurance if you take. So on life insurance, you don't have to pay GST. Similarly, services of health insurance business provided by insurer to the insured, where the insured is not a group. So health insurance services also same point is applicable. Explanation: for removal of doubt, this exemption shall apply. Now please note, important is the date. If in examination 100% they can test you. Why I told this is important is only because of this reason, because the dates are very important over here. In examination they can test you with respect to any policy given before 22nd of September 25 and policy given after 22nd of September 25. If it is before this date, then GST is applicable. If it is after this date, then only exemption is applicable. Then reinsurance of these above two items are also exempt. Meaning of group and health insurance I have given over here. Then there is a small clarification given in a chapter called as value of supply. So value of supply, one chapter is there. In that value of supply chapter, there is a small clarification which they have given. What is that clarification talking about? Clarification on various doubts related to treatment of secondary or post sale discount under GST. See, GST is very clear with respect to one point. Post sale discount means what, sir? Let us say Priya Saris sold goods worth rupees 10 lakhs to Karina Saris. And I told Karina, if you pay me within 30 days, then I'll give you a discount to you of 10%. Now this is not a, this is one kind of post sale discount. This is a post sale discount ka example. This is example number 1. Example number 2. This is an example of post sale discount, wherein if Karina pays me within 30 days, she will get a discount of 10%. If she does not pay me within 30 days, she will not get any discount. Now example number 2 for post sale discount is, let us say I sold goods to, I told Karina, in a year, if you purchase more than 10 crore rupees, then I will give you a discount of 20%. If you purchase from me more than 10 crore rupees in a year, I will give you a discount of 20%. Now in a year, that means at a time, she may not purchase more than 10 crore rupees. In a year, I may give some hundreds of invoice to her. Invoice number 1 will be for 5 lakh, 10 lakh, 20 lakh, 30 lakh, 40 lakh, 2 lakhs, etc. So by this, I may give around 50-60 invoices to her in a year. Against all these 50-60 invoices, if the total purchases are more than 10 crores, then only she will get a discount of 20%. Now this is also a post sale discount, wherein the discount will be given to Karina after the sale has been made. Correct? No, the discount is given to her after the sale. Now the difference between example number 1 and example number 2 is, here in case of example number 1, it was agreed at the time of supply and the discount is linked to a specific invoice. It was agreed at the time of supply and the discount is linked to a specific invoice. Whereas in example number 2, it was agreed at the time of supply that the discount will be given, but it is not linked to any invoice. It is not linked to any invoice. So if you remember, in case of discount which is given after supply, if you satisfy 3 conditions, then only discount will be allowed as subtraction. Condition number 1 is that it should be agreed between supplier and recipient. Condition number 2 is that it should be linked to a specific invoice. And condition number 3 says the ITC on discount should be reversed by the recipient. ITC on the discount amount should be reversed. If you satisfy all these three conditions, then only this particular provision is applicable to you. Correct? Something like this we have studied now. Something like this. Now what happens in example number 1? Because you are satisfying all the condition, this discount is allowed as deduction while computing value of supply. This discount is allowed as deduction. Whereas in case number 2, because it is not linked to any specific invoice, while computing value of supply, it is not allowed as deduction. But still company gives this kind of discount by issuing a document called as financial credit note. By issuing a document called as what, sir? Accounting credit note or financial credit note. They will issue accounting credit note or financial credit note and they will give this discount. But are they allowed to subtract the value of supply? Answer is no. Have you understood the story? Have you understood the story that discount given before supply, after supply, linked to specific invoice, not linked to specific invoice, but company still gives this discount to the employee as financial credit note, though they are giving the discount, value of supply is not reduced. Is this point clear? Now we will come to the clarification. What is the issue? What is the clarification? We'll see. Clarification on various doubts related to secondary or post-sale discount under GST. So I'll just read the clarification and what is the conclusion story. I mean, I have explained you what is the story, etc. So see, they have written financial or commercial credit notes, etc. Something like this. Whether full input tax credit is available to the recipient of supply when recipient makes discounted payment to the supplier of goods on account of financial or commercial credit notes issued. Now, in this case, credit note issued is financial credit note. Is this discount reduced from value of supply? No. The discount is, this post-sale discount is not allowed to be reduced from value of supply. Now, because the discount is not allowed to be reduced from value of supply, can the recipient take full ITC on the total invoice value because you are not reducing it from value of supply? Answer is yes. Now, in case number 1, the recipient will not be able to take full ITC on the invoice value because one of the condition is what, sir? ITC also should be reversed. ITC also should be reversed. Here the question of reversal of ITC will not come because it is not allowed to be subtracted under section 15(3). So if it is not allowed to be subtracted, you can take ITC on the full amount. But if you are allowed to subtract the discount amount, then ITC should be taken only on the amount paid by you after adjusting that discount. So the question is whether on the financial credit note and debit note, financial credit note or debit note are not as per GST. So whatever discount is there as per that, can it be allowed to be can you take ITC on full value? It is clarified that recipient will not be required to reverse the input tax credit attributable to discount provided on the basis of financial or commercial credit note issued by the supplier, as there is no reduction in original transaction value. Why, sir? Because there is no reduction in original transaction value of supply and accordingly corresponding tax liability also should not be reduced. Issue number 2. Whether post-sale discount offered by manufacturer to its dealer would be treated as consideration paid by manufacturer for dealer's supply of same goods to the end consumer as a monetary value of inducement of supply of goods manufactured by him to the end consumer. Now this point says what, sir? Consideration definition, if you remember, consideration definition says what, sir? Consideration includes payment in money or otherwise by the recipient or another person, but shall not include subsidy given by central government or state government. So this is one part of the definition. The other part of the consideration definition says consideration includes monetary value of any act or forbearance by the recipient or any person, but shall not include subsidy given by central government or state government. So the second part of consideration definition says what, sir? Monetary value of any act or forbearance shall also form part of consideration. Now here you remember I gave an example of this bus driver. The bus driver will stop normally whenever you are traveling for a long distance bus journey, 6 hours, 8 hours, 7 hours journey. Though there are a lot of restaurants coming in between, the bus fellow will stop at one single restaurant only. So at that single restaurant only he will stop, though there are many restaurants, and that restaurant owner will give some commission or he'll give free food to this fellow. Correct? So the question is, so similar kind of activity happens in case of car manufacturing also. So there is a car manufacturer, let us say Tata Group is there. Now there will be a car dealer or showrooms will be there. Now this showroom is normally not owned by Tata, though it is Tata Cars ka showroom, it is not normally owned by Tata. They have to, many people take franchisee, and there is this customer. Now what happens is, sometimes the car model, because a new model has come or a new design has come, therefore the car company will give a discount to the dealer so that they can sell the product to the customer at a lower rate. See, normally I purchase the car at 8 lakh rupees, I sell the car to the customer at 10 lakh rupees. Okay, sometimes what may happen, this company may give me additional 1 lakh rupees ka discount so that it wants me to sell the car at 9 lakh rupees only. So whether this additional discount which is there, is it actually, can I call it as, instead of discount, can I call it as, see, instead of discount, can I call it, see, if I have already made the payment, no, they will give this 1 lakh rupees to me. So this 1 lakh rupees, can I call it as monetary value of any act or forbearance for selling the car, for which they have given the clarification. Whether post-sale discount offered by manufacturer to its dealer or distributor would be treated as consideration paid by the manufacturer for dealer's supply of same goods to the end customer as monetary value of inducement of supply of goods manufactured by him to the end consumer. So what is the clarification telling? Clarification says, Section 231 of CGST Act defines consideration. Okay, the story and all we know. It is clarified that such discount cannot be included in consideration as monetary value of inducement of further supply of these goods. However, in case where manufacturer has some agreement with the end consumer, which he will never have any agreement with the end consumer. So if he has any agreement with the end consumer to supply the goods at a discounted price, the manufacturer may issue commercial credit or debit note to the dealer, enabling such dealer to provide goods at agreed discount rate to the end consumer. Therefore, it is clarified that post-sale discount given by the manufacturer to the dealer for supplying the goods to the end consumer at a discounted rate should be included in the overall consideration as it is an inducement towards supply of goods by the dealer to the end consumer. So this point they have just added, telling it should be included in the overall price. When I am charging the customer, I should charge at the respective price only. Then whether post-sale discount extended by manufacturer to the dealer can be treated as consideration instead of in lieu of activities performed to promote the sale. Now the question is, so here can I treat it as consideration? Here they are telling what, sir? Can I treat this post-sale as consideration? This spoke about for inducement of further supply. This was a consideration so that he can make the further supply. Or here they are telling, can I treat it as a discount? Can I treat it as a consideration for advertisement services, or can I treat it as a consideration for promoting the sale of goods? A inducement is I am influencing someone to sell. Here I am giving this discount so that he can advertise more and sell the product. Now what is the provision telling with respect to this? Where dealer receives such post-sale discount, they may engage in promotional activities to boost the sale. However, these activities ultimately enhances the sale of the goods that the dealer themselves own, thereby increasing their own revenue. Whose revenue? Dealer ka revenue. It is clarified that post-sale discount offered by manufacturer to dealer in such cases shall not be treated as consideration for separate transaction of supply of services. GST would be leviable in these cases where dealer undertakes specific sales promotion activities such as advertisement. See, on this discount which the company is giving, there is no GST applicable. GST will be applicable on what, sir? Whatever the services of advertisement are given, customization or specialization services, exhibition services given, only when such services are explicitly stated in the agreement with a clear defined consideration payable on such supply. In such cases, dealer provides distinct services to the supplier. Accordingly, GST would be chargeable. Okay, this is not value of supply. This point is time of supply. Next point is, so value of supply, basically there is just clarification. So yeah, clarification point is there. Next we have is what, sir? Time of supply. Time of supply topic talks about what is the point in time when supply took place, therefore I can pay GST accordingly. Now, time of supply of vouchers has been omitted. Time of supply of what, sir? Vouchers has been omitted. So we had a time of supply of goods and time of supply of services, section 12.4 time of supply of goods in case of vouchers, section 13.4 time of supply of services in case of vouchers. Now that has been omitted, meaning that section is no more applicable. Why, sir? Because they have given a clarification with respect to vouchers. See, what they have told basically is voucher are treated as actionable claims. Vouchers are treated as what, sir? Actionable claims. So if you are dealing in actionable claims, then negative list of supply schedule number 3 says if you are dealing in actionable claims, it is not a supply. Therefore, they have given some clarification over here. What is that clarification? I'll just let you know. So there are different types of vouchers. Depending on what type of voucher it is, they are telling whether it is supply or not. First, we have prepaid instruments. Prepaid instrument means what, sir? If you remember, someone has given you Amazon ka gift voucher of 500 rupees. That means 500 rupees ka voucher is there with you. Please note, Amazon ka gift voucher is there. That is a prepaid voucher. You just have to enter that voucher amount. 500 rupees will come to your Amazon ka account. You can purchase anything worth rupees 500. So this is prepaid voucher. Prepaid voucher means the amount is already paid. You just have to show the vouchers. You will get the product. So prepaid vouchers, they are telling prepaid vouchers are just like your money. They are just like your money. Therefore, money is neither goods nor services. No GST is applicable. These are payment instruments like with a stored value like gift card, prepaid wallet, Sodexo cards. The value stored is later used to buy the goods or services. No GST is liable because they are treated as money. Okay. What if it is not a prepaid voucher, sir? It is not a prepaid voucher. Vouchers which obligate the issuer to provide certain goods or services. No, it is not a prepaid voucher, sir, but it is a meal voucher or it is a spa voucher. Meal voucher means what, sir? I go, I have food over there and come. So that is a meal voucher. So using this voucher, I can go have food and come. That is a meal voucher. Or spa voucher, using this voucher, I can go have an haircut and come. So here, this voucher is specifically telling that you can do this particular thing. I have a voucher which says you can go to Starbucks and eat or drink one coffee. Or I have a voucher of McDonald's which says you can go to McDonald's and buy 2 make aloo tikki burgers. Now the voucher specifically says what you can go and purchase. It is not telling you will have to see, some vouchers will be there with a condition telling you purchase more than 5,000, then you will get a discount of 20%. No, it is not that kind of thing. This is a voucher which says, which is not a prepaid instrument, but which says that you can purchase this particular thing and only that thing you can purchase, nothing else. So these are treated as actionable claims. These are treated as actionable claims and therefore not treated as GST, not liable for GST. Considered as actionable claims because right to claim goods or services is there. You have the right to purchase that goods or not. So it is on you completely. You decide whether you want that right or not. So it is you who is going to decide about whether purchasing that or not. Correct? No. Now underlying supply redemption. So this is different. See, prepaid instruments is money and not a prepaid instrument which says you can purchase this product, that is actionable claims. But underlying redemption means what, sir? You in this where vouchers are redeemed, the actual goods or services are supplied to the customer. Now let us say there is a voucher which says I can go to McDonald's. We saw this meal voucher, etc. So for meal vouchers, what is happening? For sale of voucher, there is no GST applicable because vouchers are actionable claims. But I am using this meal voucher. I am going to McDonald's. Correct? No. See, there will be one person who is going to give the voucher to me. He is the issuer of voucher. So for issuer of voucher, there is no GST applicable. Now I have this meal voucher of McDonald's. I can purchase 2 aloo tickets. I go to McDonald's. I give this voucher. They will give me 2 aloo tickets. Now McDonald's has given 2 aloo tickets. Now because McDonald's has given 2 aloo tickets on this particular transaction, GST is applicable. So when I redeem the voucher, GST is applicable. Who should pay GST? McDonald's. For the sale of that product, they should pay GST because they are selling that food. No, Correct? No. So on that day, GST is applicable. If someone has given the voucher to me, now because someone has given the voucher to me, at the time of giving voucher, there is no GST applicable because this voucher is treated as actionable claims. But when I go and redeem this voucher, at that time GST will be applicable. When vouchers are redeemed, the actual goods or services are supplied to the customer. In this case, GST is applicable on those goods and services which are redeemed, because you are now purchasing those products. No, on that product, whatever GST is applicable, that is required to be paid by you. Distribution on principal to principal basis. Distributor buy vouchers at a discounted price from the issuer to resell them at full price to the customers. They own the vouchers and earn margin, which is selling price minus cost is their profit. It is not subject to GST. Why, sir? Because I'm just a distributor. Now, distributor can be of two types. One is principal to principal basis distributor or principal agent relationship. Meaning, you are a person, you are Amazon, you are having vouchers. You have 500 rupees ka vouchers. Now, I purchase the vouchers from you at 450 rupees and I sell it to people at 500 rupees. So, I am just purchasing from you and selling it to you. Please note, I am purchasing from you. This is important. I am purchasing from you at 450 and selling it to people at 500 rupees. So my money, my margin is how much, sir? 50 rupees is my profit. 50 rupees is my profit. On this, there is no GST applicable because I have purchased the voucher from you, which is an actionable claims. I have sold the voucher to someone, which is an actionable claims. This GST is not applicable. Now here principal to principal is there. Case number 2. Amazon is there. Amazon has appointed me as their agent to sell their vouchers. So I am finding different customers and selling Amazon ka voucher, for which Amazon will give me commission. On this commission, GST is applicable. On this commission, what, sir? GST is applicable. So first, principal to principal basis and principal agent basis. In principal agent, only on the commission amount GST is applicable. Here there is no commission. I am purchasing the product, selling the product. Correct? No? So distributors buy vouchers at a discounted price from the issuer and resell them at full value to the customer. Not liable to GST, this is considered as actionable claims. Principal to agent basis, distributor or agent does not own the voucher. I am not purchasing, I am not owner of the voucher. They only promote or distribute the vouchers or market the vouchers so that they can earn some commission or fees. GST is applicable on the commission or fees. Commission or fees, whatever commission I am charging, on that GST is applicable. Additional services. Services like advertising, co-branding, customization, customer support, tech support, etc. provided by distributor affiliated to voucher services. Of course, these are extra additional services which are separate services. On this GST will be applicable. Voucher redeemed, unredeemed voucher. Unredeemed voucher, if the voucher is not redeemed only, what will you pay? On what amount will you pay GST? So no GST is applicable on unredeemed vouchers. Then on input tax credit chapter, there is not that great change, meaning there is no implication for you as an inter students, but for final students there is a case law with respect to which they have to study this. So what happened under section 17 subsection 5? Section 17(5) talks about block credit. Section 17 subsection 5 talks about those items on which input tax credit cannot be claimed by you at all. Correct? No? So here you cannot take input tax credit on goods or services or works contract services which is used for construction of immovable property other than plant and machinery. That was the provision. Now the word plant and machinery is now replaced with plant or machinery. So before the word was what, sir? Plant and machinery. Now they have changed the word to plant or machinery. Plant or machinery, the words plant and machinery shall be substituted and shall be deemed to have been substituted with effect from 1st of July 2027. And this changes is assumed to be made from the date when GST law was started. Now tax invoice, debit note and credit note. With respect to this, what is the change, sir? With respect to this, change is something which is not highly impacted on you. Now if it is a commercial credit note or debit note, if it is a commercial credit note or debit note, it cannot be issued as per GST law. Correct? No. And because it is a commercial debit note or credit note, the GST value will not be reduced. With respect to that, they have told one point. Any registered person who has issued a credit note in relation to supply of goods or services or both must declare the value of such
credit note in the return during the month when that credit note was issued, but not later than 30th November following the financial year in which such supply was made, or the actual date of annual return, whichever is earlier. And the tax liability shall be adjusted accordingly, provided that no reduction in output tax liability of the supplier shall be permitted if the input tax attributable to such credit note has not been reversed where such recipient is a registered person and the incidence of such supply has not been passed to any person in other cases, in B2B cases. So if the ITC is not reversed, then you cannot reduce the output tax liability. See, basically, when I give a credit note to you, my sales value is going to decrease. When my sales value is going to decrease, that means I'm going to pay less taxes on my, I have to pay less output tax. If I'm paying less output tax, that means, if I'm paying a less output tax, what does that mean, sir? If I'm paying a less output tax, that means what, sir? My tax liability is reducing. Now lawmaker says you cannot reduce your output tax liability if that opposite person has not reduced his input tax credit. That is the only point. Now here section 38 time pass, they have told the words auto generated statement is now replaced with this word called as statement. So this GST 2A and 2B, they were called as auto generated statement. Now they are just called as statement, not an auto generated statement. Then section 44 talks about annual return. So annual return is there, read with rule number 80. Annual return is there. No? Annual return is required to be filed by every person. What is the annual return which you have to file? GSTR 9. GSTR 9 is the annual return which is required to be filed. Now this annual return is not required to be filed by you if your aggregate turnover is up to 2 crores. If your aggregate turnover is up to 2 crores, you don't have to file annual return. Every registered person whose aggregate turnover in any financial year from financial year 24-25 onwards is up to 2 crores has been exempted from filing annual return for the said financial year by the commissioner. So if your turnover is up to 2 crores with effect from financial year 25-26, you don't have to file what, sir? Annual return. So these are different amendments which are there under GST as well as income tax. Very nice and beautiful amendments are there. Some amendments are important, some amendments are not important. With this, I'm concluding this video. All the very best for your examination. Study well. Hope to see you very soon in Jayam Vijayam with great marks. Bye bye. Take care. Enjoy. Happy learning.